what I see a lot of, though, in the market is that people are not able to achieve that. So what they're doing is they're going in, they're renovating 20% of the units. They realize they're just not going to get where they need to go, but they can sell it and get a good IRR. So they sell it as a value add, even though they bought it as a value add. They sell it as a proven value add, and they sell it to the next guy who then renovates 20% of the units and sells it as a proven value add, and the cycle repeats itself.
Right.
So it's because none of those guys are hitting their numbers, and they know they can't because they've overpaid. At some point, the music is going to stop.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to Weiss Advice. I am your host, as always, Yona Weiss. Thank you for joining us today on this wonderful journey we're about to embark on. I'm with Jonathan Twombly today, which is a pleasure because I've seen him around. He is very well learned in the multifamily syndication space, has a lot of experience. I'm really excited to finally get to speak to you. So Jonathan, how are you?
I'm well. Thank you very much for having me. It is a great pleasure to be here and to be connecting with one another.
Absolutely. This is my favorite thing in the world to do. So, it's a lot of fun. I'm enjoying this, and I'm glad you joined me. So a little background, you guys may have heard of his name before. He is the founder of Two Bridges Asset Management, which is a multifamily syndication company. He's been around doing this since 2011. So he's been in the business for a while. And he recently started his multifamily mentoring program called the Multifamily Launchpad. Right. But Jonathan, you haven't always been in the syndication space, right? I can tell by the gray hairs on your head.
Yeah.
You've been around the block a little bit. So what were you doing before you got into multifamily syndication?
I'll just mention the gray hair for a minute. I'm one of those guys who went gray really early. So I've had gray hair for pretty much my entire adult life. So,
oh, wow. Okay.
Yeah. But yeah, so I've been around for a while. I didn't start out in multifamily. I was a lawyer for more than a decade, actually, Wall Street. And I worked in Boston and London as well as a commercial litigator, and then focused kind of the end of my career on real estate related litigation, especially with respect to hotels.
Mm-hmm.
So was before I actually got into real estate on the investment side, I was spent, I guess, about 5 years litigating real estate deals that went bad.
Right.
So that was an interesting kind of introduction into how the deals are structured.
And it probably came about right at that time where there were a lot of deals that went bad, right? I mean,
well, it was actually right before that. It was actually right before that I started getting involved in that. So yeah, we were, there are always litigations about deals going bad, especially in the hotel business. I'm sure that there are probably a lot right now going on where people are looking for, a way out of their obligations. But, we were dealing with back in those days was really more of like a problem caused by good times, that we represented a lot of hotel owners, and oftentimes the chains that represented them would decide they wanted to build a hotel right next door to our owner's hotel or something, and then there would be a big fight about whether they could do that or not.
Gotcha.
So stuff like that.
Interesting. Any crazy war stories, like some crazy case that you once dealt with that you'd like to share here that maybe you've never shared before? Or maybe you have.
I don't know about crazy cases. So I did, one of my kind of early victories as a lawyer was we represented the company that built the original World Trade Center, the contractor, and the owners of the World Trade Center had sued the contractors to abate the entire World Trade Center of asbestos.
Wow.
And then basically, through kind of a procedural maneuver, I figured out how to get them out of the case, which was great. But it also was one of the things that really made me sour on law, because here I was this very junior associate who figured out the winning strategy to get this huge company off the hook. And basically this was kind of like a case where that company was kind of testing out our firm. They became a client of the firm as a result, probably spent tens of millions of dollars in legal fees after that. It didn't make one difference to me other than I got a good review.
Out on the
they said, that Twombly guy is pretty smart. That was it. And that was very frustrating to me because the whole legal, especially big law, it's just not structured in any way to allow like quicker advancement
Hmm.
or at better salaries than the guy who, everybody else in your class. So it was very frustrating.
Right.
But I will tell you one funny war story. One of my responsibilities as a very junior associate was like to get court filings filed and served on time. And one time we were responding to, we were briefing something, and we had to get our reply out and postmarked by midnight or it would be late. And literally was putting the papers together, and there was like a huge case with like a dozen other parties that had to be served, and like I had to make sets for everybody to send them out. And like at 11:45 p.m. it was finally done. I raced out the door, and with this box, this whole box full of papers, to go to the post office to try to get them, mailed. And I run out, and it's actually the day of the New York taxi strike, right? And so all the taxis are on strike. There's no taxis anywhere, and this is long before like Uber and stuff. Then, so the taxi pulls up in front of the hotel next to my office. I run up there, and there's a couple getting in. I'm like begging them, like, "Can you please have this taxi?" And they're like, basically, no, like, no way, we're not going to a taxi. So this black car driver pulls up, and he's like, "Where do you need to go?" And I was like, "Got to get me to the post office across town." And he's like, I'm like, "How much?" $20. Okay, jump in. And we're just sitting there. And this is like 11:45 p.m. at night, and just like deadlock traffic in
Oh
Midtown
man.
Manhattan. So I'm sitting there watching like the clock tick, and soon it's 11:59, soon it's 12, and I'm like, the deadline, like this is going to be all kinds of consequences to pay. Finally get to the post office, and the main post office in New York is like this big, huge building. I don't know if you've ever seen it. They film a lot of movies there. It's got these giant steps. Run up the steps, get into the post office, get in line. I'm waiting there, and finally I get up to the window, and I'm like, I said, when are these going to arrive? And he said, well, today. And I was like, when are they going to be? Huh? And I'm like, today. And this is after midnight. He's like, I can get there. They can get there today. He's like, yeah. I said, when are they going to be postmarked? And he said it'll be postmarked yesterday. And I'm like, what? And he points at the clock behind him. The clock on the wall in the post office still said like 11:45 p.m. the day before. I'm sure they had it set up that way so people could get their stuff postmarked like after midnight. So it was actually technically in default that I got, but the clock
That's
on the
cool.
wall at the post office said 11:45 p.m. the day before, and it
That's a
all
good
was
story.
fine. So
That's a good story. Either that, or he forgot to change the clocks for daylight savings, and it
yeah,
was
no, I'm pretty sure it was
it
intentional
was
actually.
intentional.
So,
That's incredible. That's an awesome story. That's that's a fun story. So you had a lot of that fun, if you'll call it that, during commercial litigation as an attorney. Moving into the syndication space, and I'm pretty fascinated. I mean, there are a lot of mentoring programs out there, right? I've
yeah,
come across tons of them,
there are times. Yeah,
especially multifamily. And because it is, first of all, I mean, it's a great space to be in. There's a lot of opportunity, even though the market is, I wouldn't say it is saturated at this point. There's still tons of opportunity out there. And you really do need a mentor in order to do it well. That's what I've found. Anyone can try anything on their own, right? Any
sure.
entrepreneur, whatever, can do, but you really do well if you have a mentor, someone guiding you. What what kind of led you to start that in the first place?
Pretty much as soon as I got into the business, I wanted to start a mentoring program. Partly it's because it's sort of just in my nature. Everybody in my family is in education in one form or another, or at least like my parents' generation, like that whole generation of people, all in education in one form or another. So it's kind of in my blood.
Mm-hmm.
And I've always enjoyed teaching and mentoring. And when I got into the multifamily business, I was pretty disappointed with the options that were out there, right? I thought that they were too expensive and too shallow. And I went through a lot of the materials that fortunately I would have worked with people that had the materials. I didn't have to pay for them myself, because if I had to pay for them, I would have been really incensed about how bad they were. What I really found was when I started doing deals myself, I just kept on getting blindsided by stuff that wasn't ever mentioned in any of these programs.
Right.
So that kind of like reinforced my desire to do something that was better and more accessible, right?
Mm-hmm.
So I wanted more people to be able to get these things, make it easier for them, and also just make it better. So I really, about 5 years ago, started kind of tinkering around with doing courses, and I went through a couple of iterations of courses, and then finally launched Multifamily Launchpad in its present form about 2 years ago.
Hmm.
So it's set up as a monthly membership. You can be in for as long or as little as you want. There's no obligation. It's not going to cost you $30,000. It's just meant to be really comprehensive and really easy to be a member of.
Gotcha. Gotcha. Okay. And that's awesome. I mean, and I assume you have students that are, graduating and successfully going into the multifamily investing space.
Yeah. Well, I mean, listen, I'll be honest. It's very tough for people right now.
Yeah.
It's very tough to find deals. And what I have been getting a lot of, feedback from students is, hey, Jonathan, thanks to your program, I'm finally in contract on my first deal. And then I follow up with them like, hey, what happened with that deal? And like, oh, it fell out of contract because we found this, or the seller was unreasonable about that. Or so it's been tough for people to get stuff
Hmm.
over the threshold,
Right.
to be honest. And it's not designed to be like a program that you graduate from. Like it's an ongoing mentoring program.
Gotcha. Okay.
So for as long as people want to be in it and want to continue to have access to the community and have access to me, they can be in it. And then if they
Gotcha.
decide they don't want to be, then they can go.
Right. Okay. That's interesting. Now I've heard you, for the past couple of years already, I've heard you on a number of panels, right?
Yeah.
And you've been pretty, straight down the road that you think, the market, and I'm just going to go right there. The market is it's in a bubble, and a lot of, it's hard to find good properties at good rates, and there's going to be a correction, et cetera. I know you have, correct me if I'm wrong, sold off a bunch of your portfolio. And I mean, do you see that coming to an end at a certain point? I mean, are you still looking? You're still trying to find where there's an opening?
Yeah. I mean, it's always still looking, trying to be creative, find deals that work, or maybe in markets that are a little more overlooked.
Mm-hmm.
I was, historically I was looking in the Southeast because I thought the demographics were really great. And for a while it was a little bit of an under the radar market because everybody was focused on Texas, but that's changed in the last few years as people have come to understand the demographics of the area.
Mm-hmm.
And I think its proximity to New York doesn't hurt, right? Given all of the wealth that's in the Northeast that wants to invest elsewhere, right? It's a lot easier to get there than Texas. So it's attracted a lot of attention. But what that means is that the cap rates have become really compressed, and it's very difficult to find deals that work. So I've been actually trying to kind of zig where other people zag and look in other places that are not in favor at the moment, right? So places that have a reputation for being landlord unfriendly, or
Mm-hmm.
they don't have this spectacular demographics that the Southeast have. I think there is a little more meat on the bone.
Okay.
To be honest, though, I haven't really seen anything great come up in those markets yet. And it's, again, I think because there's so much attention being paid to multifamily at the moment that people are paying a lot of money for deals that, like, frankly, in my mind, are crap. So, like, I wouldn't touch them. But that's where we are. I mean, there's a lot of money out there. There's a lot of attention on this asset class, and there's a lot of money coming from other, people who used to invest in hotels and retail and other things like that are all plowing their money into multifamily now too. Right. So whether it's a bubble, I don't know. It is certainly overpriced as compared to your historical, cap rates, right, by a long shot. I suppose as long as we have low interest rates, that will continue. And the real issue is what's going to happen with interest rates. They have a tendency to spike unexpectedly, and if they do, and you're holding the bag, it's not going to be fun.
I hear.
But I still continue to look for deals and hopefully find stuff that can withstand that sort of price movement if it happens.
Gotcha. And what would be something that you consider to be a good deal, just kind of objectively?
Objectively, I mean, look, as a syndicator, if you want to make money, there's only a couple ways to do it. If you're looking at like stabilized properties, then you've got to buy them at a pretty generous cap rate in order to satisfy everybody, right? So you've got investors who have been trained to look for an 8% preferred return. And so you're basically got to look at kind of 9 and 10 caps if you're going to make money, which is almost impossible to find right now. Right? And so the other way that people do it is, well, they do these big rehab deals, right, where they're buying something at a low cap rate and then hoping to increase the rents so much that they're getting it up to the cap rate that they need to.
Mm-hmm.
What I see a lot of, though, in the market is that people are not able to achieve that. So what they're doing is they're going in, they're renovating 20% of the units. They realize they're just not going to get where they need to go, but they can sell it and get a good IRR. So they sell it as a value add, even though they bought it as a value add. They sell it as a proven value add, and they sell it to the next guy who then renovates 20% of the units and sells it as a proven value add, and the cycle repeats itself.
Right.
So and it's because none of those guys are hitting their numbers, and they know they can't because they've overpaid. At some point, the music is going to stop, right? For the kind of run-of-the-mill syndicator. I think there are people out there who are really, really good at what they do, and they have an expertise at finding those deals that are really undervalued or just where the market has mispriced them somehow. Folks like that are going to be fine. But I think there's a lot of people out there who, like, it's been easy for the last 10 years. The market has just gone up and up and up and up and up. And like, that makes a lot of people who aren't that good at something feel like they're good at it. But as Warren Buffett says, it's only when the tide goes out that you find out who's been skinny dipping, right? So I think we're going to see that. But as to the timing, I mean, I've given up on trying to predict the timing of it. We might be heading into, with the COVID ending and all the stimulus money, we might be heading into like a boom period for a while. So that's going to keep, attention on it and prices high. And
Right.
so, in the short term, honestly, next 12 months, I don't see any correction happening
Okay.
unless there's some kind of interest rate spike.
Yeah, that's good news.
Yeah. But that doesn't mean I also say, oh, it's a great buying opportunity. I mean, I also don't believe that. Just because there's not a correction doesn't mean that you should necessarily be buying. But
Sure.
it's just me.
Yeah, listen, and everyone, and I appreciate that because everyone has different views on the subject. Have you considered other types of asset classes, like other type of investments?
Yeah, absolutely. One of the things that I'm looking at very closely is cannabis-backed real estate, because of the quasi-legal status of cannabis and the fact that you can't finance it. So that leads to some opportunity. And in that case, a lot of what the industry feels is that there will be full legalization in the next 5 years or so, or at least banking reform that'll allow you to start financing these deals, and that will cause cap rates to compress. So there's an opportunity to get in now at very high cap rates and potentially sell at low cap rates. So that's something that I'm exploring.
Interesting. So things more like industrial or retail.
Yeah, exactly. Both industrial production facilities and retail dispensaries.
That's great. Yeah, and I've spoken to someone who's actually in the financing sector. I mean, obviously the mainstream banks and federal is not giving loans there, but there are those lenders that will finance this type of asset specifically because it is a niche, because they do see it as an opportunity. That's something that I definitely see expanding.
Yeah. I mean, those lenders tend to be private lenders and they're very expensive, right? So it may or may not work on your particular deal, but there is some opportunity to finance them. But because of the risk, they're charging a lot of, or the perceived risk, I should say, they're charging a lot of, very high interest rates for those loans.
Very interesting. No, I mean, it's not something that gets talked about a lot. I think partially because of the kind of stigma it has, and the fact that many states have still kind of rejected the approval of the industry.
Yeah, but it is still, it's actually legal in some capacity in 36 states now, right? So there's only 14 holdouts that don't even have medical marijuana at this point. So those states are behind, the federal government is behind. And I think that's why the consensus in the industry, and of course, like anytime you talk to anybody in any industry, they're always bullish about their industry, right? Of course. So, and I'm sort of standing on a little bit on the outside of it, so I'm slightly skeptical. But the whole, when you talk to people in the industry, I mean, they're convinced that, legalization is coming on a nationwide basis, and at the very least, banking reform is coming soon. So that will change things quite a bit when it does.
I mean, it certainly will. We are, we'll see. We'll see what happens, right?
Well, maybe we can do a follow-up show. Yeah, maybe we can do a follow-up show in a year and talk about it if I want.
Right, exactly. I'd love to do that. I mean, it is fascinating. I've seen some advancement of it over the past couple of years, but it still tends to be on the kind of on the slow the slow pace of other asset classes that are, obviously any others. Real estate is really more mainstream. There are very few that are out there that have such an aspect to it that make them have that potential, and where it's still kind of almost outlawed or have stigmatized.
Yeah. Have you guys done any cost segs on cannabis related entities or cannabis related?
We have, yeah, we've actually done a few like warehouse and production facilities. They actually come along with other in the states that obviously allow them. They come with other certain types of tax abatements or tax. What's the word I'm looking for? Tax credits, exactly.
Yeah.
Special tax credits for that. So it's beneficial on both ends because
Yeah.
you can get the tax benefits and you can, make the money on the
Ha-
deal.
Have they been able to pay you with a check, or have they had to give you suitcases full of cash?
Oh, we don't accept Bitcoin yet at Specs, but yeah, no, these companies still they have LLCs, and they have companies that are registered. I don't know exactly how they're doing business or whatnot, but in fact, one of the people that did reach out to us was a CPA who was dealing with this with clients and said, "Hey, this is something that we want to get done," because his client was in that business. And a lot of these people, they're not that have these businesses are not solely in that business, so it's usually a kind of a supplemental business, another stream of income that they're bringing on.
Yeah. Well, there are local banks and regional banks that will deal with cannabis now where it's legal.
Right.
It's just the national banks that still can't touch it. So it's
Sure.
possible to get a bank account now and write a check. But I actually, when I used to have a podcast years ago about alternative investments, I remember talking to people about cannabis, and they were literally having to deal with cash all the time,
Hmm.
physically get banking services, and they were generating so much cash that they didn't know what to do with it. So I was hearing stories about stuff like people just showing up at their relative's house with like a suitcase full of cash. I mean, like, here, just pay for your kid's tuition because I can't even put the money in the bank. I can't spend it. I can't do here. Just here's take this, $25,000 for college. So
That's crazy.
yeah.
It has become a little more mainstream. What are some other things? I'm just out of curiosity. I mean, you mentioned you did have a podcast a while back, and I'm sure you talked about a lot of different things. Anything like stick out, from that experience, an episode or
I
something that
mean,
was just like,
just we covered everything. We did talk about Bitcoin in the early days, not really early days of Bitcoin, but early days of like mainstream awareness of Bitcoin. We talked about the syndication of racehorses. We talked about, what else? Syndication of marinas, syndication of, it wasn't like the syndication show, but I mean, a lot of the ways that these deals are structured is as syndication.
sure,
So, people are investing in, marinas, mobile home parks, fractional interests in boats. I mean, you name it, like you can turn it into an alternative investment if you want. So it was an interesting show to do. I did talk to a lot of people doing, selling websites, selling, just really anything, so.
yeah, you can make a business out of anything. Right?
Yeah.
Alternative investment can include anything and everything in the world, but it's pretty impressive when you see people doing things like that. And I guess it really just does depend on the circles that you run in, right? Because,
Yeah.
it's
Yeah. Oh, another one
things
was
we
like
discussed.
ownership of like music rights. That was
Mm,
another interesting one. Where people, a lot of famous musicians have sold off the rights to their music, and you can buy that as an asset because there's, 30, 40 years of copyright left, or what have you. Or
mm,
if they're still alive, it's their life plus 75 years. So it's pretty long lasting asset and creates the stream of income. So
that's
there,
interesting.
there's all
Yeah.
kinds of stuff like that. Yeah.
That is actually interesting. I've never explored that, but I do know that royalties are considered a passive income, and so
Yeah.
they're Schedule E income as well, which can be a good kind of alternative to to real estate investing.
Yeah. Yeah.
That's
Absolutely. I'm sure that the yields on those have probably dropped also,
right,
but like everything else. But the interesting question is whether you can finance it. Like, can you
right.
get debt? Maybe you can. Like, maybe it's like seen as like a security. You can get debt against it.
Interesting. Yeah,
I
that would
was
be something to
never
explore.
delved into that.
Well,
But
yeah. Well, Jonathan, I want to transition now into the final four. This is the last part of our episode. We ask four questions to all of our guests, and the first question for you is: what is the worst job that you ever had?
well, despite the fun war stories before, the worst job I ever had was being a lawyer for sure. I mean, it was really a grind. The hours were just there was just no control over my life at all. And despite the fact that I was making, what most people would consider a really good salary, it was just not worth it. I had no life. And I remember there was one time where I worked for 41 straight days without a day off. I would work like, you know, one year over the holidays, I worked like every day other than Christmas Day. Like it was just, it's just stuff like that would happen. I was constantly missing stuff all the time.
Mm.
So it was uh, not, it was not conducive for happiness. So glad to be out of that.
Yeah, for sure. For sure. If you could think of a book that you've read that's given you a paradigm shift, love to hear it.
Paradigm shifts. That's a little tough, but whenever I'm asked this question, I always wind up coming back to the same book, which is called The War of Art. It's a play on the book, The Art of War. But The War of Art is it's really aimed at writers and artists, but it also is really applicable to entrepreneurs. It's about how you know, fight resistance and just sit down and get the work done
Mm.
every day. It's a really quick read. Like you can read it in an hour, maybe hour and a half, but it's really a good book for kind of getting you in the right frame of mind to work.
Interesting.
When nobody's telling you what to do, like when you're on your own and you don't have a boss cracking the
Mhm.
whip, like this is how you get it done.
Yeah, it seems like something necessary for any entrepreneur because there's so many distractions, and
Yeah,
you got to make sure to put in the hours and get things done. So it sounds like a good one. So the War of Art.
yeah, by Stephen Pressfield.
Okay, we'll put that on the add that to the book list and put it in the show notes for anyone interested. Third question for you: what's a skill or talent that you would like to learn?
Skill or talent I would like to learn.
Can be anything.
Gosh, that's a really tough one. I think I would like to learn to be a better salesman of myself. And I guess maybe that would surprise people who are like on my email list to see like me blasting out email all the time and stuff like that. I mean, I kind of know how to run through the motions of
Mhm.
marketing, but it's still like saying anything good about myself is very tough. So I'd like to become a better self promoter, I guess, and not be so worried about sounding salesy or sounding like I'm marketing. I'm always trying to market without sounding like I'm marketing, and maybe,
Right.
you know,
For sure. And I mean, the best marketing is when you don't realize it's marketing, right?
right.
And in my experience, the best way to do that is actually through teaching, and through education.
It's true. And that's why podcasting is such a great medium, right? Because you can do it, you can teach and inform people, and it's free. You don't have to get them to pay you, to hear your message. So,
Exactly, for sure. Okay, that's a good one. Okay. So fourth and final question for you. What does success mean to you?
I think for me, it really means having freedom, right? Like freedom from stress, or from bad stress. Like you want to have a little bit of stress, like a deadline stress is
Mhm.
okay, or like finishing a project stress is okay, but stress from like having you know your needs met and stuff like that, like that to me is success. Like when you have complete freedom or complete control over your time,
Right.
and all that other stuff is taken care of,
Hmm.
like indefinitely, like not just like for now, but like forever. That's kind of the mark of success, to be able to just do what you want, when you want it, where you want to do it.
Sounds good. It's a great answer, and it definitely is. When you're in, have that control, have that freedom, anything's possible at that point, right?
I mean, that's why in some ways I feel like I've already achieved it, because just getting out of law and now having really control over my time, which I've managed to create through real estate investing and through my coaching programs and stuff. Just like I feel like, well, I've already made it. Sometimes it's a little bit hard for me to like push myself harder, because I'm kind of like, well, yeah, this is kind of what I wanted,
Right.
So I don't, I got out and I can support myself without having to work like a crazy person
Right.
anymore. So that's
Yeah. So you certainly made it. I mean, in that respect, I mean, I always like to look at it as a journey, and you're continuing on,
yeah,
the path of success in whatever you do. So just keep doing it.
absolutely.
Well, it's been a pleasure. Where can our listeners find you or reach out to if they choose to?
Well, Probably the best place is to go to my Facebook group, which is called the Multifamily Investment Community. That is a free Facebook group, spam free, BS free, just about learning and connecting. So that is a really good place to connect with me. The one caveat is that I'm very stringent about keeping the spammers out. So there are some questions you have to answer to get in. And Facebook, in its infinite wisdom, only shows those to people who come on computers. So you have to log in the first time on your computer. After that, you can use your phone.
Interesting.
But Multifamily Investment Community is a great place. And the other place is you can go to multifamilylaunchpad.org and grab a download there, and that'll get you on my email list.
Awesome.
If you'd like to get on the list.
All right. Well, thank you again for joining us today. It's been a pleasure. I'm glad you made the time.
Thanks for having me. It was great fun. Over too fast.
I know, right? It does fly by pretty fast, but hopefully we can do it again, do a follow-up episode at a certain point.
Absolutely.
And to all of our listeners, remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn, send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.